Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Hey, look who's on time today. Win is not even here to see. And you know what? It's okay. Hey, we got the jobless claims today. Excuse me, non-farms payroll tomorrow. And yesterday we had a huge move up because it looks like the whole debt limit thing is going to be extended into December. Markets really like that. I was actually quite surprised. I'm not sure that was the main driver of the action yesterday in the treasuries, but it did appear to be that it was a much more major flow than we had expected. So let's go and look at the charts, see what's got going on over here. So here you can see S&P 500 just took off. Like, holy crap. That is just absolutely smashed through that, resistance in the overnight session. So very positive. Treasuries, well, they came down when it happened, but not a whole lot. So there appears to still be a bullish flow out there. I'm not quite sure what the deal is, but somebody wants to buy this. Thanks for this early morning review. It's actually better than most. Oh, thank you so much. All I'm doing is I'm just explaining what happened. I don't know why everybody wants to go and be like, well, there's this level and this level and what. Who cares? Why did it move? We'll talk about that in a second. Fast, and that covers majors. Yeah, there we go. Okay. Oil, again, coming off yesterday because Putin said that Russia is going to help. So, was it Putin and McConnell? Saved the market yesterday. Natural gas, way off of those highs. Very, very good for a euro economy. Gold and silver have not really moved. I guess silver a little bit higher, but silver has been more depressed than gold, so I'm not sure I can read too much into that. And then copper's still within the range, but looking slightly bullish. Coming over to currencies, Bitcoin took a pretty good jump yesterday, right? I forgot to post my note yesterday for the Patreon subscribers, but we took a pretty good jump. I think that this was maybe off of some rumors and comments about regulation and so forth. Like, so far, it's like, oh, we're going to regulate it. We're not just going to destroy it, which I didn't think was ever going to happen. But the concern is still, you really think that Tether has $69 billion? Okay. So, and then the dollar strengthening here off of that move yesterday. So when you get the indexes up and the dollar up, that's good, I guess. It goes up more if it's, a weak dollar move. So then, and we come over here to just the opening action here in the treasuries. It looks like they did sell it, but there's not a ton of volume coming out. But we've got initial jobless claims estimate 348,000 versus a previous reading of 362,000. This is going to be an interesting number. Yo, hello everybody. I can't say it enough, guys. The market is more statistically efficient than it is informationally efficient. So many retail traders say, oh, it doesn't matter why it did that, or it's pointless trying to figure out why. Just look at the chart. I'm telling you, you want to, orders are what moves the market. To predict where the market is going to go, you need to predict the orders. And how do you predict the orders? Well, you need to know why they're coming in. If we know what the flows are, then we can make better predictions about what's going to happen. ZN and ZB looks like a quick short. Could be. I don't know. Like, I really think that this jobless number, I guess I shouldn't say I think, I hope that this jobless number is going to be really good. So, are there any of you who have experience with Windows 11 and NinjaTrader 8? Not yet. I didn't realize. I mean, I know it's this month. Is it already out? Oh, it was available on the 5th. I knew that. There's something else happens this week, isn't it? Like next week we get Cowboy Bebop and Netflix. Anyways, there's a bunch of things coming out here in October. How to upgrade without waiting in line. Well, I'm probably not going to do it this week, TLA Trader, but maybe next week I will upgrade, and I'm going to make a video about, what features might matter to traders. Although I have to say that it might be better if you're not super technically oriented, it's probably better to wait. You know what I mean? The one thing that people aren't saying is that the U.S. economy is contracting at a fast pace. Well, I don't know. I mean, there were some economic reports early last month that did suggest that we were getting a contraction like that. You're right. But since then, they have backed off, and some have even shown that we're expanding again. So I think that the situation is very fluid. You know what I mean? It's a fluid situation. But let's see if what's going to happen if this jobs number tomorrow ends up being, they hit it out of the park. Could happen, right? Speaking of which, I do not have my news squawk on. Oil is going higher, and so is the YMESNNQ. Or you just mean like right now? Right now it is, yes. We'll see. If the jobless claims come out, I'd be interested to see how the jobless claims affects oil. Like oil is really in an interesting spot, right? Because they came back so hard yesterday because of that news from Putin. But then maybe you're also getting some positive economic developments, right? So, but Goldman Sachs, I think that their year-end target was like 90, right? So this whole Putin thing might be a short-term buying opportunity. I don't know. Nah, there's nothing in there. My nose itches really bad, but okay, here we go. 30 seconds. Well, ZB is going bearish into this news. Okay, here's a pull. The micro's just completely pulled. It's funny. Whoever you are offering liquidity at one spot 554. Way to go, you're brave. It's good. 326 versus an expected 348. It is good. That's way better than. I think that should get them moving. They're going to be slow about it first, but like, let's go back over here. So if we come in here and we look at last month, the past few months number, right? That was okay. So it wasn't quite as much of an outperformance as last month's was a disappointment. Last 2 or 3 months as it was a disappointment, but that is still a pretty good beat, right? One of the better beats in the last year. So now let's see here. That's not everything that we have today, right? Well, Feds Williams is also going to be speaking here. Although he's been relatively hawkish lately, right? Cool. Wow, you got an okay move to start, but now they're reverting again. Well, there is a little bit of steepening going on. We'll see if it gets started. We're going to watch that 30 and that 5. That was a pretty solid downtick in the 30-year. ZB is trading today is about 25. You mean like the range of today will probably be about 25 ticks. Yeah. A Bloomberg investigation finds Tether holds some of its reserves in billions of dollars worth of Chinese commercial paper. Dun, dun, dun. That was 2 hours ago, retweeted by Patrick Rooney, being reported by Tracy Alloway. Who is that? Tether has invested some of its reserves in Chinese commercial paper. Business Week obtained a document showing a detailed account of Tether Holdings' reserves. It said they include billions of dollars of short-term loans to large Chinese companies, something money market funds have avoided. That's not good, guys. Thank you, Patrick, for tweeting that. Haven't seen anything about... Oh, here's Bitfinex saying, let's see here. An hour ago, the U.S. will come after Tether in due time, says Liberty Reserve founder Arthur Burdowski. Wrote me in an email from a Florida federal prison where he's serving a 20-year sentence. Almost feel sorry for them. Almost. What? And then he... Anyone seen Tether? Oh, that is the story. That is the story. China. No, this is something else. After I returned to the U.S., I obtained a document showing a detailed account of Tether's holdings reserves. It said they include billions of dollars of short-term loans to large Chinese companies, something money market funds avoid. And that was before one of the country's largest property developers, China Evergrande Group, started to collapse. Okay, so we're definitely getting the spread going on here, right? That 30 years getting crushed. I hope Dollar Chad is still in that short. I also learned that Tether had lent billions of dollars more to other crypto companies with Bitcoin as collateral. Oh, snap. You know what that means, right? The money doesn't actually exist. They loaned them money. And the collateral was Bitcoin. And then they used that to buy more Bitcoin. I consider that definitive proof that Bitcoin is essentially being pumped by tethers. That's what that is. Mm-hmm. This is not, I don't know, man. I don't know, man. It's not like Bitcoin is reacting to it or has reacted to the story, but it should. Like if I was ignorant and I didn't know and I owned Bitcoin, I would hope that would make me say, time to cash out. I would hope that that's what I would say. They might, it looks like they're just going to ignore it and maybe even go higher. But that would be like, it's not worth it, right? This is going to fall apart and it's going to be ugly. And I'll put the story since I'm so concerned, but you might not have a Bloomberg subscription, right? But you know what? So I got the Bloomberg subscription. I didn't say anything about when I did it. And I was like, oh, I don't know if I'm doing but it was like a good deal. Okay. But like, I want a Financial Times subscription and like, zero. But I've actually used it. I was worried that I wasn't going to use it, but I've actually used it. Do you think they will r/? Let's see if Reddit is saying anything. Define stable, a wild search. Ah, they don't have it. Okay, so I'm gonna post it. A link. I wonder if there are also more companies in China that have problems just like Evergrande. Well, there certainly are, right? We already had 2 other developers like literally go under, was my understanding, right? So the issue is this, like, what is the Chinese government going to do now that this is out on the news, right? China has been cracking down on cryptocurrencies, right? Why so explain how this works, right? Tether prints Tether and gives it to that company as a loan, and then that company owes them the Tether back or the money back, right? It's a loan. Why do you do that? Because you're a Chinese company and you want to get the money offshore, right? Which is exactly what the Chinese government has been trying to prevent, right? So as soon as China reads that story, I mean, I don't know why they hadn't already been looking at it, but you kind of have to wonder, with the crackdown that China has been having, if China is going to go in and start confiscating that stuff. You know what I mean? Like it's going to be a problem for those companies, whoever it is that is owned, and the question has got to be who, right? The next question is absolutely who. Like, people are gonna. This is like really, really bad for Bitfinex and Tether and Bitcoin. I maybe I'm way blowing it out of proportion, but I'm just sitting here gaming in my head, like, what happens next? Okay, people ask who it is. The Chinese government gets involved. People start, demanding real proof of, and then especially that it's other Bitcoin companies and it's being backed by Bitcoin and all of this sort of thing. Like, yeah, you're printing money like a bank. You're creating money like a bank, and you're not regulated like a bank. And you're probably printing way, way, way more money than a bank would ever be allowed to do. Do you guys really believe that a small company that is some offshore, it's not based in the US, it's this offshore company, and they have like some 60, 70 billion dollars worth of money? It makes it one of the top 50 banks in the country. And it's run by like 5 employees. Really? This is a big deal. This is essentially the largest Ponzi in history, right? And everybody in Bitcoin just continues to ignore it because they're making money. But now Bloomberg is getting involved, and you have to think, you know what? Other people are going to start digging now, right? Like the New York Attorney General, they kind of dug and they gave up. It's not the end of it. Maybe I'm trying to convince here. Maybe I'm just trying to convince here, but that is actually, that's exactly what I'm doing here. Is I think that it's a massive fraud. Here I have some evidence that I think pretty conclusively proves it, and I think it's a really big deal. And so I'm going off on this to convince myself that it really is a big deal, when probably the cryptocurrency community ignores it. At least in the short term. It'll get worse. It'll get worse. Interesting also that all got released overnight. Like, if I was Bloomberg, I would have waited and posted that like on a Monday. What the heck is he doing? Oh, he deleted the tweet. Bitfinex posted, yeah, penguin. Is there any other stuff that we see overnight that's interesting? Krugman's, is Paul Krugman really honest? Is really seriously promoting the? Okay, well, let's read. Krugman's idea of $1 trillion platinum coin has resurfaced to solve our problems. It is just as stupid now as it was when Professor Nutcase first offered the idea. I didn't realize that he was the one that was promoting that idea. One of the guys I trade with sent me a t-shirt that says, "I don't care about your Bitcoin." Really? I want a shirt like that. Ah, man. I want to see it fall. I want to feel vindicated. I don't, when it falls, and I'll say, look, I was telling you the whole time. Here's my chart. Here's what it was showing. The whole time it was saying that this is going on. Nobody believed me. Now you give me the pat on the back and say you were right, Seth, but probably nobody will care. Isn't that how it always is? I am seeing more people retweet this as well. I don't know. I think that the Bitcoin community will try and ignore this, but I think that this story is a big enough deal that you could try taking a speculative short on it. It's like really skewed risk reward right there in Bitcoin, right? Like you're likely to lose going short, but if you go short, the reward might be crazy. When in company and someone asks what I do, someone always launches in to tell me about Bitcoin. Jeez. Oh, you went long 95? Did I, I didn't even tell you guys what I did yesterday, right? Because after I got out, or after I closed the stream, I forgot that I had that long in the ES, right? So I just held it like all day. And then that whole thing about McConnell offering to extend the debt ceiling until December came out, and it just skyrocketed. So that ended up being, oh man, what was it? I'd have to add yesterday's stuff yesterday. So it ended up being off of one contract, a $341 trade. It was sim, but it was like, wow, that was one of the best like single trades I made in ES. And then I also, I don't know when I did it, but I also got into a short or a long in rates. And, I caught a little bit of mean reversion and basically pulled back the day to be break even off of that one from my live trades. Always fun making sim money by mistake. Well, it wasn't necessarily by mistake. It was just like the thing was that I had a really good entry, and I just kept missing the exit because I wasn't paying attention to it, So, but then making the extra, I guess, was by mistake, huh? So I looked over and was like, oh, I'm still in that. Well, what do you know? But I was surprised because we had been discussing with Dollar Chad, like, why? Because it looked like, well, it's not so much today, but like, I think that jobless claims number was really good, right? I think that all of the tea leaves that we're getting right now suggest that tomorrow's jobs number is going to be better than expected. So I would expect that the treasuries would be, I think the 10-year should at least get to like 131.16, right? But it's not really moving. So we were discussing that in Discord, and I was like, well, we got to figure out where this flow is coming from. And Dollar Chad suggested that it was because of the debt ceiling debacle. Well, that flow is certainly out there. I'm not sure if that's really affecting treasuries significantly. It's definitely affecting the bills. It's definitely affecting the short-term funding markets, right? And you can see that because there's like a huge kink in what they're asking for the bonds around the time that the debt ceiling is supposed to expire. And when McConnell came in and said, we'll extend it to December, then that kink almost completely flattened out, right? So it's definitely happening in the short-term funding market. I don't know about treasuries, but like, here's the thing is that, okay, so news came out that should deflate that trade. Now I'm sitting in here, we got a pretty good piece of news and it's still being kind of slow. I don't know. Is it, I suppose that it could just be because I'm not necessarily seeing people buy. It could just be that that's not enough for them. They want to see the jobs number, and so they're not really doing anything, right? It could be that. I told you ZN and ZB will fall. Well, you was very unspecific. Let's put it this way. You have a new map wall hanging? Oh, I want to see. I was thinking yesterday. So I've been trying to do this LED sign thing. And I'm giving up on the current project. I think that what I'm going to do is I'm going to switch out the Wi-Fi enabled chip that I've got for the non-Wi-Fi enabled chip because that one has 5-volt power. And I will go over to 5-volt power and that will just run the thing like it was supposed to and it'll be done and maybe I'll sell it or something. And I'm getting new stuff to make an even more advanced board. But I was thinking about it, and because I was seeing these people doing it, and they were like combining these little matrices and making like a matrix the size of the wall. I was like, oh, we should do one that's the whole wall, and then I could get in front of it and I could do like, like they do at the NASDAQ, where they show the big movers and stuff, and you're in front of the TV. That'd be so cool. It is now my favorite thing here in my work. Is it? So is the room that you are in, Ace? Is that like that's the only thing that it is basically used for is trading? It is the computer trading room, because that's basically what this has turned into. Although mine is more of a streaming room. I always get these extravagant ideas. I'm like, oh, I should do this and this, but then I'm like, probably you shouldn't do that, Seth. Like one of the things is I got this light. There was two lights. One light was the track light, which gives me indirect lighting. You don't really see that a whole lot in here on this screen, but it's there. And then there was another one that was just to be for like ambient light, like normal operation. And for some reason, after like 2 months, that light burned out. It was like an LED light. It burned out in 2 months. What the heck? Right? Anyways, so it's just been broken the whole time, and I was like, wow, I should replace it. So I was telling them, I was telling my wife, I was like, we should just turn it into a power plug, and then we can go and buy professional track, right? Nope. Oh, it also has a workout area. Oh, it's waffle time. Wait, isn't that a little early for waffle time? I thought waffle time was more like 7:30. Oh, maybe not. Maybe I'm crazy. Oh, so I don't think I've received it yet. I think that text messages are just slow because we're on different carriers, right? Oh, wait. I think I just got it. Oh, I like that. It's a 3D printed. Is it actually raised, or does it just look that way? It's like a 3D printed map of Utah. I do like it. That's very cool. I would like to get a 3D printer. It looks fun, but I don't know what I would do with it. Print figurines, I guess. Have my wife paint them. It just looks like that wicked cool. Oh, okay. It looks 3D. Gotcha. Is ZB gonna drag him down? So note, by the way, like the ZB is really being dragged down. Like the ZB is really steepening. But the 5 and 10 year, not so much. Bought it at Park Silly during Park Silly? Oh, I've never heard of that. That's funny. That's a funny name for an event. I have some other stuff here in this room that like I haven't hung because I don't know if they're things I would necessarily want on the stream all the time, but like, so I just have a hard time deciding where I want to put them. Like I have a picture of an alpaca. I should get on that. There's a bunch of stuff that we need to hang in the house that my wife just never put up. Okay, just coming out from the Hill, I see the headline, Democrats say they will accept McConnell's debt ceiling offer. There was a little bit of concern that they would reject it because that's like, oh, now I have to vote on raising the debt ceiling twice? They wouldn't, it's not necessarily a win for Democrats. But here, Democratic senators on Wednesday signaled they will accept a proposal by Senate Minority Leader Mitch McConnell to raise the debt limit for 2 months to avoid a potential economic crisis. Senator Tammy Baldwin noted that accepting McConnell's offer to vote to raise the debt limit to a certain number high enough to cover the nation's financial obligations until December would amount to a quote-unquote temporary victory. In terms of a temporary lifting of the debt ceiling, we view that as a temporary victory with more work to do, she told CNN's Jake Tapper. Baldwin made her comments after leaving a closed-door Senate Democratic conference meeting where lawmakers discussed McConnell's offer floated earlier in the day. Senate Majority Leader Charles Schumer is expected to announce his party's position on McConnell's offer Wednesday afternoon. Baldwin noted that accepting the deal would allow Democrats to avoid having to undertake the arduous process of amending the 2022 budget resolution to set up a standalone reconciliation package to raise the debt ceiling. Under Senate rules, they would have to set the debt ceiling at a higher number under reconciliation and couldn't simply vote to suspend it until after the 2022 midterm election. Right. So the issue with reconciliation, the reason that the Democrats don't like it is, one, they would have to attach a specific number to it. And two, they can't just set it to a time period. So they would like to say, okay, you can spend as much money as you want until 2024 or whatever. That's what they've done in the past. But under reconciliation, they can't do that. It has to be specific numbers. Other Democrats sought to portray the decision to accept McConnell's offer as a win. McConnell caved, said Elizabeth Warren after the meeting, and now we're going to spend our time doing childcare, healthcare, and fighting climate change. You mean you're going to spend your time trying to put together a bill that has zero chance of passing in its current form? Democrats in recent days turned strongly against using the budget reconciliation process to raise the debt limit because it would have consumed up to 2 weeks of floor time and would have required many floor votes. Well, that's true, too. The bigger problem was that Democrats had put it off for so long that there wasn't enough time anymore to use reconciliation, which is basically what the Republicans were forcing them to do. So McConnell, and I think that there was also this thing that the Democrats were saying, well, we'll change the filibuster rules so that you can't filibuster raising the debt limit. And I think that might have been what prompted McConnell to make that call. But anyways, within all the context, there was a risk that the Democrats would decide to reject the offer because you don't want to have to raise the debt limit twice. It's not really a very good win for them. But it sounds like they had a conference, and all of the comments from the Democrats coming out of that conference were all somewhat positive. So that where we at. Need to close a couple of tabs here. Okay. ECB accounts show they debated a bigger cut in bond buys during September. That is also bearish for treasuries. But they ultimately didn't do it, I guess, right? Okay. Let's see here. AL says ZB might hit 158.31. Okay, that's pretty close though. I think you're probably right. Well, so let's see here. Should I try and make a wild prediction? Oh, I won't make a wild prediction, but I'll try and guess where it would go. Okay, so I think that the way is clear, probably to see 158.27 in ZB. Good morning, Dave. Are you still short? Kathy Wood dumps Nintendo and buys 8.3 million shares of short seller target Ginkgo Bioworks. They watch 158.27. Not today. It's going to be interesting if this turns into a stronger downturn. Like at the moment, it's just been a slow creeper. There could be a point though at which certain players have, basically panic. Especially, but probably it would have to be below the overnight lows though. Like below AO's level that he was mentioning. Okay. Well, there's 31 and 30. Oh, that's weird. Never mind. Forget I said anything. Could be a short ZB opportunity. Yeah. Well, you know what? I did. I came in and immediately when the open came, down ticked, and I bought in the rates because I thought that the jobless claims were going to be good, and they were. They didn't really seem to move us, but now it looks like they are being moved, and I'm wondering if that news story that I just read from the Hill, where the Democrats were basically all saying we're going to accept the deal. So I think that maybe some of the buying was still holdouts, Like I was talking earlier, and like Dave knows because we were talking about it yesterday, I was very skeptical about how much of the flow in the Treasury has been risk off because of the debt ceiling. And the big move that we had yesterday says that, yes, it very much is, at least certainly in the equities market. It looked like buyers were on strike because of the debt ceiling, and that kind of resolved that problem. But also probably some of the buying, at least in Treasury. I don't know if it accounts for all of it. But now we're seeing here that the jobless claims didn't really move them. But now that this news that the Democrats had their conference and it sounds like they're going to do their thing is coming out, probably all of the senators go and tell all of their contacts, and now they're selling. Is she and Creepy Joe are going to FaceTime today? Oh, is that right? I read earlier that they're talking about having a face-to-face meeting, but it was all like speculation. Okay, what's this? Now CoinDesk has tweeted, Tether's holding reserves include billions of dollars of short-term loans to large Chinese companies, according to Bloomberg Business. So now CoinDesk is now posting the headline. It very much, let's go to Reddit here. reddit.com/r/BTC. That would be one place that I would expect to see the story. Three warning signs to suggest the Bitcoin rally is overextended okay. They have posted it about an hour ago. Only 4 comments. Let's talk crypto because it's been like 2 minutes. You missed the big crypto rant, Dave Velke. So I'll do it again for you if you want. Now the treasuries are moving. So remember I said 158.27, and they smashed through that like it was nothing. So I don't really have a good level below that other than the yesterday's lows, which was 158.06, which seems like quite a ways away, right? But that there's potential, I think, based on the things that are driving this and the way that it started as a slow grind. There's maybe some potential for this to turn into a real bender move, but we'll see. In fact, I'm hoping that this might be something that I can hold until tomorrow. Okay, so the rant is, so the story is Bloomberg went looking for where Tether has their money, and this guy went all over the world to try. I haven't read the whole story, but just from what I saw when I was scanning, he went all over the place trying to figure out where the money was, and then when he got back, somebody had leaked like a balance sheet basically showing where all of the money was. And a good portion, several billions of dollars, was coming from Chinese companies. So people have been accusing Bitfinex of giving Chinese companies loans so that they can basically smuggle money out of China, right? So that's problem number one, because China ain't going to like that. China's going to come in and step in and do something, and they're going to find out who those companies are and, do something about it. So that's the first problem. But then number two was that a lot of it was to other crypto companies, and the backing was Bitcoins. So basically what they do is they loan somebody a certain amount of money, and they say the collateral that we're going to use is Bitcoin, and then they go out and they buy Bitcoin with that tether, pumping the price up. Okay. So it's basically printing money. It's what they're doing is not, well, not only that, but when you consider how many billions they've been putting in, that says that probably we are correct that cryptocurrencies have been pumped by Tether, and that if it was regulated and had to follow all the rules and everything, they wouldn't be able to do that, and Bitcoin would not be nearly as high as it is today. So this is a real problem for the cryptocurrency space. I think based off of comments that I see from cryptocurrency proponents in the past, they're going to try and ignore it, right? Because they're going to say, even if they were exposed, it wouldn't be a problem. Well, the thing is we've known this stuff has been going on, because we knew from the New York Attorney General investigation that they've been pulling this stuff, right? So, but I think the fact that Bloomberg has such a knockout story, there's going to be more. Like now the question is who is it? How much of it is, and obviously the information exists. And maybe Bloomberg has more, and they're going to post more stories next week. I don't know. But I think this is really bad for Bitcoin. You can see that they're now moving. But it might be worth a really speculative short in Bitcoin. And who knows? One of the things they've been saying is, whenever there's a bad story, that there's a pump. Like the insiders say, something's happening, and they do a pump, and they, so they can get out or whatever. And it's been pumping this week, and I kind of have to wonder, and Bitfinex has been saying things, kind of makes me wonder if they knew that the Bloomberg story was coming, right? Because they basically, what they do is they try and push price up so that people ignore the bad news. How long is that going to last? I don't know. I'm getting a little excited, but every time I get excited about cryptocurrency falling apart, it doesn't. The real reckoning never comes, I don't know. Here's another story that I wasn't aware was really going on. Bitcoin is growing thanks to rumors the SEC will approve a Bitcoin ETF in 2 weeks. I doubt that, but we'll see. I limit exposure to crypto. Yeah. I mean, I'm totally willing to take a bet a long-term bet on it if I think that the price is fair, but it hasn't been showing me that for a very, very long time. My garlic coin is looking good. Actually, we should check that out because a couple of days ago it was going well. I haven't heard anything since, which probably means that they probably chilled out a little bit. So we were like at 8 cents, I think. 7 cents is still good. 7 cents is still very, very good. Yeah. They were at 8 cents, but that didn't last very long, but they kind of got a good plateau going on there. Well, if the cryptocurrency space doesn't completely collapse, that garlic coin has, I think that garlic coin is looking pretty good, right? But I own a lot of it, so don't listen to what I say. No more than 3%. Oh, that's quite reasonable. Oh, I posted that story in the Buttcoin subreddit, and it's being downvoted. Kulud says he's long on altcoin indexes. Former U.S. Treasury Secretary stablecoins should really be backed by dollars and should be freely transferable. Well, they're not backed by dollars, so apparently they're backed by debt. Zian might have seen a floor. Well, so it's kind of interesting. I didn't see anything there that really clued me in that we were going to back up. Now that 16.5 might be a spot. One thing I should note, though, was that the down move was just really fast, and they probably have to take a break at some point, right? But I still think that there could be some levels lower. I don't know. So what was the level again? Okay, NZB 158.06. 06 and 07 was the lows from yesterday in the overnight session. So that's probably going to be their targets. That's a big move, though. Well, he was bearish on it, I think. If he can call the absolute low of the day, then I'll be impressed, right? Actually, no. If you really want to impress, here's the thing: if you really want to impress me, show me like a year's worth of broker statements. Then I can be like, oh, okay. Here's how this person has been trading. But I kind of get a little frustrated when I mean, I really like it when you guys post stuff. I'm not saying don't post your trades or say what levels you're looking at or anything like that. But what does frustrate me is when you try and play this game like, okay, I said this, and then, hey, look, see, I was right. I'm always right all the time, because it's really, really easy to, distort our perceptions and, only say things in certain times and stuff like that, or only say it after the fact, and you know what I mean? So that's why when you say things like that, I'm always kind of a little resistant to it, because I'm trying to teach, especially anybody that's new that comes in here, I'm trying to teach them that, hey, like, you need to do your own stuff, and it's really easy for people to fool you, right? Not saying that that's what AO is doing. I'm just saying he hasn't shown us something that I can like really feel comfortable coming here and saying to you. Like when because we praise Ace all the time, right? The reason is because I've seen his statements. The same with some of these, like Alligator in chat. He's also shown me statements before. That was actually like the first day we did the Discord, and he posted a statement. I was like, wow, okay, this guy's the real deal. He's been doing it for a long time. That was the first day that the Discord was opened. I remember that day. Former U.S. Treasury Secretary, there is no need for digital currency from the Fed or Treasury. Well, it's going to happen anyways. That's funny. Okay, so Kulud is saying at 158.23, he's calling long. At least for short term. Or are you saying that your long target is basically 159? If it goes against me, I did not take the trade. If it runs up, I got the fill. Right. Oh man. Okay. So here's the thing in the micro treasuries. Okay. I've been enjoying the micro treasuries. Okay. When I catch a good run, I've been catching good runs. Sometimes they come back a lot on me and I'm really disappointed, but I've caught some good runs with it, and the losses have been relatively mild, except for that when I was doing that flattener whole thing. That whole auctions week was like an absolute disaster. Okay. But other than that, I've been doing quite well with it, and I'm very happy with them. But I'll tell you what, you sure spend a lot of time sitting there screaming at the screen for a fill. Oh my gosh. Is especially if you're anytime, man, these micros, anytime outside of, up until the European close, from the options pit open to the European close, forget about it, man. It's just you will be spending forever, and they're gonna give you a price, and you're gonna be like, oh yes, if I could make $30 on this trade, then that'd be really great. And then maybe I can take one contract off and let it come back, and then try and take another contract when it get longer. Something. They're just not gonna fill you at the $30. They don't do it. They see your order there, and they're like, nope. It's almost like the ZN looks at the micro and says, well, there's this guy really wants his fill in the micro, so I've got to turn around. Freaking all the time, waiting for fills in the micro treasuries. It's like, you thought that waiting for a fill in the ZN was frustrating? Try and do it in 10-year. Oh my gosh. Man, I'm seeing I guess I have a lot of well, I've got Bitfinex, and he's on my Twitter, and he's tweeting a lot, and Business Week and Bloomberg are tweeting about it, but I'm seeing a lot on Twitter about this. Inside the wild search for the billions of US dollars supposedly backing Tether, the world's most popular stablecoin, by Business Week. Short indication in ES? Okay, well, I'm still not. So in the treasury, I'm not really seeing anything in the flow. Are you guys? Well, Kulud must have seen something there, right? Because he has a bar. By the way, I was wondering, Kulud, because you said that like he back tested it and everything. Can you show me the back test stats? Because like, did you do it in NinjaTrader? How did you do it? 2500 MBO and ZF at 22. Ah, there's that big bid there. Gotcha. It's not about flow, it's long term. Okay. Wait. So earlier this year, this is from the Bloomberg story. Earlier this year, I set out to solve the mystery. The money trail led from Taiwan to Puerto Rico, the French Riviera, mainland China, and the Bahamas. One of Tether's former bankers told me that its top executive had been putting its reserves at risk by investing them to earn potentially hundreds of millions of dollars of profit for himself. It is not a stable coin. It is a high-risk, offshore hedge fund, said John Betts, who ran a bank in Puerto Rico Tether used. Even their own banking partners don't know the extent of their holdings or if they exist. John Betts was literally the banker for Tether, so this is insane. Tweets Cass mildly interesting Piancy. Okay, so you use Sierra Charts data and Python. Okay. So one of the issues that we have, like backtesting order flow is super effing hard, right? And especially if you were using like raw data and then doing it in Python, then you would definitely know the challenges involved in it, right? And I have found, like early on, I would do like tick replay backtesting sort of stuff, and ran into certain issues with it. And, that was part of why I made those videos that were like about how to develop strategies. Because I was basically trying to show people the mistakes that they make in NinjaTrader when they're doing their backtesting. You use a type of bar that doesn't give you accurate results and all of these sorts of things. So if you did it yourself, it's really, really hard for me to know how accurate or useful it would be, other than being able to show the forward testing since then, and that it matches the backtest results, right? That's probably the best proof, right? But even then, like the thing is, I really want to get into backtesting level 2 data. I think I want to get my level 2. It's a little project that I just keep forgetting or I don't have any time to do. Get the level 2 data backtesting, and then I want to try and implement machine learning algorithms into NinjaTrader. So there's a couple of machine learning frameworks that I think I can integrate. See what we get. But that's kind of the whole thing. The reason that his interests me is, like, remember, the market is more statistically efficient than it is informationally efficient. So it is a lot easier to find an informational edge in the markets. This morning, I think, is a pretty good example. The treasuries were very slow about the down move, but now it is accelerated, and it is accelerated based on fundamentals that we knew basically right from the open that we could have taken advantage of, right? So informational efficiencies are a much more abundant, and they're much easier for you to take advantage of, and that's why I encourage people to look at it, because I think it's a much easier game. But that doesn't mean that statistical edges don't exist. It's just they're going to be very, very difficult to find. But if they are very, very difficult to find, that can kind of guide you, right? Is you're going to have to dig deeper. And if you have order flow data and level 2 data and all of this information that is really hard to backtest on anyways, and that other retail traders really can't do, then you're much more likely, at least, to be able to find such a statistical edge, right? Well, it looks like ZB is going for another leg. I mean, you guys got a pretty good short-term bounce, but what was the highest that ZB got there? 30. No, that was a joke. If he had gotten long at 23, it wouldn't have been a bad trade, though, right? I mean, you could scratch it now. I know. If it was me, knowing me, I probably would have gotten long 23, it'd come back, and now I'd still be holding on to it. I make that mistake so often, right? Man, so I got my Twitter up here, right? And I got this one column that is just like for traders. And so I've got all of these tweets from Bitfinex and these guys about this Bloomberg story. And it just keeps popping into my head. Like, this story is so devastating for Tether, in my opinion. And the crypto world is going to just try to completely ignore it. I don't know. It makes me want to go and look at so here, if I go to Reddit. Two days ago, Tether's CFO tweeted that he was contacted by a journalist digging into a Tether story. Today, the Department of Justice announced the formation of a crypto enforcement team, and then the CFO deleted his account. What? Okay, Khulud says, my aim is ES short, likely VWAP. Below that, 4320. Well, what is VWAP here? Is 4380? One of the things that's going on that I think is a little interesting is that the S&P 500, after the jobless claims news, did have a little bit of a rise, but then that sputtered out about 15 minutes afterwards, and since then it has been lower. Now, that move lower has been accompanied by higher rates. So it looks to me like the S&P 500 is saying rates are raising, and that's not good for us, and that's kind of why that's all going. But the rates are raising because all the fundamentals at the moment are positive for the economy, right? So I have to wonder if this is not a buy the open. Actually, I will take that bet. Okay, we'll see what they do. I mean, if ES turns into where is it? So another thing that we should keep an eye on is that what is it? 100-day moving average around 43.52. Oh, that's way too far back there for them to try and tag. Let's see here. Also, I cannot model Q-fill, so all of my back tests is with market orders. Oh, sure. That helps. See, the thing, Kulut, is with NinjaTrader, I can kind of tell people where the mistakes that they can make are, right? Like, one of the things that NinjaTrader will do is, you'll get to the close of the bar or whatever, and so you'll try and enter where the close of the bar is. But you can set the bars up in such a way, there are certain things that you can do that basically trick the simulator into giving you a price that you wouldn't have actually been able to get. So, like, even with a market order, like, basically you say, oh, you will take the closing price, but that wasn't actually what the price was at the close. Like, that's especially if you use Heikin bars or whatever it is, then you can definitely do that. But you can even do that with the regular bars if we in the right way. And I've seen a bunch of people do that and then get like a really good back test and then go, well, actually, because the way that you're putting your entry in is giving you a price that you never would have gotten, right? But for you, the only way that I would know where the weaknesses in your backtesting system would be is to go through like all of your Python code, right? So I can't say. That's why we just have to see how well it forward tests. Probably. Although peer review helps. Okay, so the treasuries took a little bit of a push lower, but they backed off pretty hard there. I should note that happened on very little volume, and that we were getting some up movements. Yeah. Well, a little bit of up movement in the 6J. The S&P 500 is just taking off like a rocket right now. I would have thought that the S&P 500 going gangbusters would push. Oh, really? Did you see that? So somebody block sold at 17 and the bid held. I think that they're going to keep going and they are eventually going to clear 17 and then we'll see what happens. They might clear it and then bid back up, but yeah, just like that. And then we'll see. And then, they take 17 bid again. That often happens. Yep. I've never understood why people backtest. Well, because if you're doing an actual technical setup, I can't understand why people don't backtest. It's absolutely crazy to me, all of these people out there that think that they have some sort of technical edge based off of when this bar does X thing and all of these sorts of things, and they don't do a scientific study of it. Like, what? Why? Why, if you had the ability to backtest it, why wouldn't you? Unless what you're doing isn't backtestable because it's based on an informational inefficiency like what I do. That is a good long in ES. Look at that go. What? Rasmussen reports retweets Ryan Stryuk, who says Biden's approval rating clocks in at 38% approve, 53% disapprove via a new Quinnipiac poll just out. Oh, Quinnipiac is kind of a left-leaning poll, and it's really bad. I get it. And Rasmussen report says, who believes these far-right conservative pollsters anymore? Anyone? Because they're basically saying, look, we were right. We detected it first. Goldman Sachs says a U.S. SPR release would likely be of up to 60 million barrels, only representing a $3 a barrel downside to the year-end 90 billion barrels, 90 BBL Brent forecast. So they're basically saying if there was an SPR release, then the high of the year target would be 87 instead of 90. Because backtests can't incorporate every facet of what needs to be filtered to execute or not. Well, that kind of depends, right? Because I think there's two facets to that one, RJ Will. On one side, there are things that we just don't have the ability to program. The way that I look at an informational inefficiency, and I match up order flows to specific catalysts to try and determine where they're coming from and what things are based on fundamentals and what things are short-term liquidity problems and so forth. And I can't program that. It's just too complicated, right? So that one is where you literally can't backtest it, right? But the other side of it is if you're literally just using a chart and you could be incorporating a lot of things. And so in that particular case, it's not that it can't be programmed. It's just that it's really complicated for you to do it, right? The number of situations, the number of edge cases that you would need to program in, there could be like several dozen of them, right? And when you go to like a real quant firm, part of, I think, what gives them edge is that they actually program all of that stuff, right? And they find all these situations where you definitely don't want to do something there, and they program that in so that the robot doesn't do anything about it, right? But then the split side of that is that if you can't backtest it, then you really don't know how robust your edge is. You may think that it's a really good edge, and if you were able to apply a scientific enough approach to it, you would see that there's no edge to it at all, that it's just completely random. But you're trading it, it's just like most hedge funds aren't buying outrights, in my opinion, says disciplined. They're doing spreads or complex options trades. Well, yes, probably disciplined. Hedge funds, yeah. If I was a hedge fund, I'm not sure that I would want to buy it and outright. I'd want to use an options trade, but a lot of that has to do with just the size of their positions and stuff, right? I've been trading for over 10 years and have never done a single backtest. Mechanical trading is not good enough. Yeah. But I think that what you're saying is, I think, like my main point is that informational inefficiency is more abundant. And we don't have the technology to backtest an informational inefficiency. That's why a part of the reason why I think that you're way better off going after those, because the robots can't do that. You're not competing against the robots at that point. You're competing against Alice. You're competing against the hedge fund that knows the same piece of information that you do, potentially. And in that game, you have the advantage because you can just get in with your one lot, right? And then they have to come in after you. At least I know that for sure, by the way. Ace trades and I trade. Well, and there's the other side. So there's another side to this, and that is, it seems to me that that noise trading can be profitable. It seems to me that noise trading can be profitable. The key to profitable noise trading, I'm not sure. I'm not sure what it is. I'm unsure how it is that Ace and RJ are able to get away with what they do. When I tried doing what Ace does, although he's changed his strategy since then, but when I tried doing what Ace Trades was doing, it did not work for me. That might have been partly just some bad luck, but it didn't work for me. It worked for a really long time. It worked for we had a good 3. How long was it? Do you remember? I don't even, man, it seems like such a long time now. We've known each other for a long time now. Sometimes I realize, it's already in my mind, it's still like Ace is relatively new to the stream, but the reality is it's been like 2 or 3 years now. But anyways, it was just before Brexit, right? There was like 2 or 3 months worth of solid summer trading where I made, I think, like $500 or $1,000 on micros or something. $20 at a time. So it was a good run. And then the whole Brexit thing came, and that just destroyed me. And it stopped working. And Ace just happened to not be trading at the time. That was a funny thing too, is that Ace was didn't get hit because he was going back to school and stuff like that and not trading very much. And then you came in before micros were a thing. That's true. It was like a good year before that. Anyways, and then I'm sure there was a little bit of difficulty, and I think that Ace was just kind of went sideways for a while on that, and then then the whole pandemic thing happened, right? And then we got back into a world where it seemed like it worked really great. And I was trading some of that. I would just be like, okay, this is a buy the dip day, and wait for the cross that I was looking for, and it would work out. But it was because I knew that, it was a buy the dip. I'm not so sure that I could pull it off now. I think that if I was doing it in today's environment, not today, but let's say the last 2-3 weeks, I think I would be struggling. Ace hasn't, but I think I would. But I don't know. I don't know, man. It's like he doesn't take every signal, right? I'm not sure what the key is to profitable noise trading, but having a very, very small profit target, not asking for very much, is a big key. Don't think that that's all of it, but that's a big key. Another big key would be being able to avoid fat tail events. So the treasuries, they came back there for a bit, but then they didn't really go. The micros, did the micros really get all the way up to 1.573 at one point? Well, that must have been a little bit of overextension on their part. Discipline asks how small of a profit target? A profit target that is less than the average rotation of the instrument. So in the S&P 500, less than 12 ticks. So with the way the Ace trades, he's only looking for 8 ticks, and then he's already taken some profits, and then he has another amount that he allows to run. So, you're managing the risk that way by putting on a lot of risk initially, but then scaling it back and then trying to take the risk by holding it for a really long time instead. Right. And if you're only taking 8 ticks and you've got good, momentum behind you, the situation is like you get the momentum, then, you might be more likely to be able to hit that. Right. It's just like, there's fat tails on this sort of a thing. There's going to be these situations where that just doesn't work very well. Like, for some reason, the market doesn't even want to go eight ticks in your favor. I've certainly gotten that in the S&P 500, right? But he just never seems to have a problem with that. He knows how to avoid it. I suppose another thing that seems to really help is to be in where there's like really the activity. Because one of the places where this is going to like fall apart on you is when there's not a lot of activity, right? Oh, sorry. Where's this, Octavius? Here's a back test for you. Let's see how it plays out. A 93% win rate. Oh, man. Yeah, there's no way that that's going to hold. But I can't see like any of the other stats about it to see how you were able to get 93%. Oh, he's live trading. He's trading like 3 full ES contracts with it too. I don't know how it's been doing recently, but I know that he's had some periods that are pretty impressive. Like, I haven't gone back and seen how much money did he make each year for the past 5 years or anything like that. But he showed me like a 6-month period. And then like he explained to me how it works, and he comes in and he would like call them all. So I could see how he was doing. So I can say that he does it, right? But at the same time, like I went and I back tested it and I did a bunch of things, and like the thing that he looks at with a large enough sample doesn't work. But when he's doing it, it works. It's like and I can't explain that part. Oh, he says at no point have I ever said the amount of contracts I trade. I do remember when I said I used 3. You aren't trading more than 10, are you? Can you tell me that? Are you trading more than 10? He says, hell no. Because I have wondered if it's just the market's following him. Like if you're taking a cross like that and you're using 10 contracts, and that might improve your chances of it working. It's possible. Okay, so the E-mini had a really great run there to start. They're pulling back right now. I don't know if it's going to completely reverse or if this is just a pullback. Oh, I'm not trading. No, you're not trading more than 10. Are you trading more than 10? 10 is this point at which I have to, it's like the size starts to matter. Or it can. No, you're wrong. If I was, there's no way in heck 10 contracts on that giant ES would do diddly crap. The math says you're wrong. The math says that every order has an impact, and that the impact of that individual order is way more than everybody thinks it is. Does it work on NQ? I think somebody was trying it on NQ and had a little bit of success, but I know. NQ is a different beast for sure. I have to say this is you're hitting on one of those points that is just like, here's one of the things that I've learned that I can conclusively prove to you if I had like a whole day. Like it's a whole day's worth of math to prove this, but I can one of the most counterintuitive results I've found in all of my research is that individual orders have way more impact than people think. And that there are situations in the S&P 500 where if you traded 100 contracts, it would be a big deal. Like I'm not just saying like the market would follow you. I mean, there'd be situations where if you traded 100 contracts, you'd be like the most dominant flow at the time, believe it or not. And you would absolutely move the price. No, it's one of the things you believe. No, it's not. It's what I'm telling you is based on basically 3 decades of scholarly empirical research. Like they've been able to go into it, and there are basically ways of quantifying essentially the impact of individual orders or of a large meta order. I can't agree 100 might move the price at some time, but not right now. Well, no, not right now. No, probably not right now. Well, but go back to what I was saying. What I was saying is that like there are some situations where if you traded 100 contracts, you would be the dominant flow, right? That's what I said. I didn't say that it wouldn't like move price. It's really weird. But then that kind of comes back to this thing that's like, okay, just take for granted the fact that every order has some measurable impact. Okay, how much is that compared to the impact of everything else that's going on in the ES at the time, right? So one contract might not mean a whole lot, right? For sure. I mean, there's so much else going in there that you can't sit down and say my one order is going to always make it move this certain way, right? Like I think what you're trying to say is you can't say every time Ace buys that is going to make the S&P 500 move up. No, you can't say that. But what I think you can do is you can go in and you can say, when you consider the impact of your actions and everything over 1,000 trades, there would be a measurable change. Like you could go in and you could say, you could have a time, like here's the experiment. They have ways of kind of calculating this. But we're going to use a time machine. Okay. We're going to use a time machine and we're going to say, we're going to go and see what the market did. Ace doesn't trade. Ace doesn't trade at all. Or we're going to see what the market did. And then we're going to go and take a time machine. Well, actually, you would do. Now I'm introducing a paradox. So we have to do it the other way. We trade. Ace doesn't trade for a year. No. I'm being dumb. Let me start over. I'm being dumb. Okay. Ace trades for a year. Then we go and we get a time machine and we go back and we have Ace not trade for that year. You would be able to go back and look at those two data sets and detect a statistical difference. That's what I'm saying. It might be a small difference, but it's measurable. And it ramps up very, very quickly. So once you're like even 10 contracts, you should have to start thinking about how you execute your trades. Because if you just start plowing in 10 lots into them, that might not work out for you. Yeah. And certainly when you get to 100 contracts, you're going to have to split that up, man. That's why FT71 likes to trade the DAX, because it can move around the instrument. But that might be the case. Well. To the point, I very much suspect that the traders at Axia are having a significant effect on the market. There has been a couple of times where Axia had a counterintuitive belief on a certain news release or event or whatever the deal is, and you would go and see all of the Axia traders on Twitter talking about it and saying it, and the market would move their way, and then later they would end up being wrong and it would like completely unwind. But like that's happened enough times, and when you look at the size that they're trading and everything else like that, and especially when you consider that they're like trading during news moves, I very strongly suspect that there are some situations where Axia is one of, if not the largest speculative order flow in the market. Do you know if NinjaTrader can break up large trades into smaller trades? So a 10 lot would be 5 times 2 or something like that. Well, you could certainly program it to do that, but there's nothing built into it. But you're right. Like, but I think you want to go even more different than that. Like, so there's one thing which is like, okay, you don't want it to hit in with a 10 lot, right? So instead what you do is you submit 4 separate 1 lot orders, right? Well, I think that some of the algorithms look for things like that too, and kind of consider all one order anyways. So I think that if you're really going to do that, that you would want to split them into like 2 lots at a time and space them out a little bit. You know, if I'm going beyond 10, then that's what I want to do, is I want to space them out a little bit. Anyways, why is this so important? I'll tell you why this is so important. Because it leads to market behaviors. There are things that the market does that we can show happen empirically because of the impact that the orders have. The best example is the square root law of meta order impact, that those orders have a really, really strong impact, but the higher the size of your meta order gets, that impact starts to decrease. So we could measure that impact that you have. We call that Kyle's lambda. So we can basically sit down and say, okay, when you trade your 1 lot, this is the Kyle's lambda of your 1 lot, right? And then we can say you traded 1,000 contracts. This is the Kyle's lambda of all of your orders when it's 1,000. And then we go to 10,000. And it turns out that at 10,000, the impact that you have per order is smaller than when you had at 1,000. And that's why you get these sorts of things where like it goes like this. Right. Everybody always says, here's the pattern. It goes up, it goes down, it goes up, it goes down. Ignore that. It will kind of trail off, because what you're seeing, it'll be like a parabola or whatever you call it. Because it's the impact of the orders trailing off, essentially, because of they've basically strained the order book too much. Okay. So that is one real completely statistical and technically based behavior that you can see in the markets that is different from what would happen in a completely random market or a random walk, that is well proven and has been shown to exist because of the structure of markets, and therefore will always happen. Right? And we get all of that from understanding that orders have a significant impact. But when you take it even further, hold on a second. This is also how we know that the market is more technically efficient than it is informationally efficient. So if there is a if there's a statistical edge somewhere that when X thing When you get this certain chart pattern that you get, there's a certain probability that it's going to go up or it's going to go down. Then people are going to trade on it. And as people trade on it, that is going to arbitrage that inefficiency out of the way. And because orders have such a strong impact, relatively speaking, compared to what people think that they would have, they're able to remove those technical inefficiencies very, very easily. Which means that you taking a technical edge and posting it out on the internet and it becoming successful is enough to ruin the edge. It's absolutely enough to ruin the edge, and you could measure that because you could quantify based on how far what your price target was essentially. So you could go and say, okay, my price target is 8 ticks, right? And here is the standard deviation of the volume at the time, and here's the standard deviation of the price movement at the time and everything else, and you could calculate the optimum number of contracts to trade off of that particular edge. And then it gets to, if it gets over 100 pre-market, then it's too much, and it will, anybody past it that tries to get on that trade past that is going to lose money essentially, right? So it's very easy to arbitrage out technical edges. But informational edges, it is not the case, because there are so many situations where there are orders coming in that have nothing to do with it, that have no informational content at all. There's the reason that is happening is because a portfolio has to rebalance. So there's no informational content in it, but it still has a huge impact on the instrument. And so you can know what we should be doing based off of the information. And you can see that we're not doing that and fade that move because you know that, oh, it's because these guys are rebalancing. It's auction day, whatever the thing is, right? So there are these informational efficiencies that are just like sitting out there waiting for you to take them. Should have gone long again. Well, Lucas says I don't agree at 100%. But everything that I showed you, if you go and you read these studies, especially the stuff that Beauchard puts out, and then you would learn, you understand why these things are all true. Could you program your own order flow trade detector? It's logic. Well, what would be the signal? I've programmed many order flow type strategies, and some of them do okay. I keep forgetting to turn the J on. Yesterday I didn't turn him on, and I'm just realizing that I don't have him on. I will enable him. Recreate Ninja Trader Zone? What do you mean? Oh, so I didn't take a look at that chart that Octavius posted earlier. It's a seasonality. Oh, I want the order flow detection, but I don't want it to be a circle. Okay, so that's a little different. Because normally it wouldn't be an issue, right? You could just go into the code and like turn that off or whatever. But for that particular indicator, NinjaTrader hides the code from us. So you would have to basically recreate it from scratch, which I could do. It would probably be a week-long project, and it probably wouldn't be exactly the same as theirs. So I don't know. You can disable the circles though, right? Well, the circles is a completely separate indicator actually.
Block cell.
Whoa. 17. Now that whole 3K there at 17 was a block sell. Interesting. You know what? They did that earlier at that same spot, remember? Yeah, it's a minor grab. I don't know. The thing is that I don't think that the Ninja Traders Vista chart sort of thing is that good. It's okay. But if you really want a chart like that, you should be using Bookmap or Jigsaw. Right? And even then, I would really strongly warn that that chart is really good at showing some things that are useful. Like they're able to show you really clearly where large orders are and how they've been moving around. It's really good at showing you how the cumulative delta is moving and where large orders are. But they are not very good at showing you orders pulling and market makers basically trying to avoid adverse excursion and things like that. The only way that I know of to really see that is to go and look at the DOM and see, okay, there's 3,100 on the bid, and then there's a downtick and only 500 contracts traded, and that means that these guys all pulled. And okay, why did they pull? It was because a large order hit into it and they pulled, or maybe it was because the 6J ticked down, and so they were pulling because of a correlation or whatever. You know, like that's the only way that I know of to do it. The charts don't show it. Question: doesn't order flow require an additional level of information than level 2? No. So when we're talking about order flow, Ace, the main thing that we're doing, I will describe the algorithm for you. When you get orders, when you get volume come in, it does not tell you that that volume is buy volume or sell volume. So the basis of a large portion of the order flow stuff that I do, at least, is I look at the best bid, best ask, and the price that volume went through at. And based on whether that volume was going through at the bid or at the ask, I categorize it as buy or sell volume. And that's kind of the little improvement that you're doing, right? Now you can categorize volume and you can create cumulative delta. And cumulative delta essentially becomes a decently, at least, I wouldn't say that is perfect, but I would say it's a decent indication of informed trading. It says, oh, that makes sense. I have an order flow indicator and I was wondering how it calculates all that info. I don't use it. Okay, so Lucas says that technical edge is arbitraged out when it's based on automated systems is different when it's discretionary, since you can apply that technical information and trade it your own way. Well, I mean, if you're the only one trading that system anyways, then maybe it doesn't matter, right? Like that's the whole thing, is go and find a technical edge, keep it to yourself, make the money off of it, right? The problem is just that, like, there's all of these robots out there searching for them. So what is it that you're going to be doing or you're going to be finding that the robots aren't going to find? Because if you're trading some truly statistical edge but then you're doing it discretionarily, that's not going to stop the robots from trying to trade it every time the signal happens. You know what I mean? Do orders sometime come in between the bid and ask? Is that even possible? Okay, so this is actually a really great question. And Ace says they absolutely do. That is where high frequency traders live. Well, so the thing is that here in the 10-year treasury, right, you can sell at 16.5 or you can buy at 17. And those are like your only choices, right? So for us in futures world, it's not really a thing. But in stocks, or let's say, for instance, you're trading the 5-year. Look here at the 5-year, right? there is a gap of like 3 ticks, right? You can buy at 026 and you can sell at 022, right? But if you're watching the tape, you could absolutely see an order at 024, which could mean that like I could go in and I could put in a bid at 024 and improve the best bid, and somebody might immediately hit me. And so like Asa was saying, that's where the high frequency traders live. Now, there are some more complicated algorithms. There was a really great paper out just like 2 or 3 months ago about this, about inferring trade direction in fast markets, is I believe the name of the paper. And he describes an algorithm and provides Python code for categorizing those orders that happen on the inside area. Right. Lucas said the robots don't understand discretionary trading. They're not intelligent. Okay, but how did you know that there was an edge? Right? I don't think you understood the point I was trying to make there. So what I'm saying is, if it is a truly technical edge, how did you find and determine that there's a true technical edge there? Right? And if not, you back tested it and programmed it. Right? So if you can backtest it and program it, even though you might trade it discretionarily, there could be another robot out there that's going to find it and trade it and remove it. And so because there's these robots out there doing this all the time and just trying all sorts of random stuff, the reality is that if you go in, you try and do a backtest and you try to find a statistical aberration that you can use as an edge for the basis of your trading system, you're extremely unlikely to find one. Right? So at that point, then Lucas, you're saying go teach a robot context the day you can. That's the day true artificial intelligence will be born. What I'm saying is, why does the technical thing matter? Like, are you sure that the technical thing is actually a thing? Why aren't you just trading on the context? Why aren't you just trading on the informational inefficiencies that you know exist? Right? Because what you're saying is, oh well, technical trading can work if you use discretion, and that's basically, and my counter to that would be, so you're trading exactly like I am. You're just trying to convince yourself that it's because of technicals that it's working, right? How do you take a trade between tick sizes? Then Ace trades, only a market maker can do that, I think. No. In futures, there's, they size these instruments so that the minimum tick ends up being the spread. That's their intention. In stocks, it's different. In stocks, they used to do things on like a quarter of a cent, or anyways, it was weird. But Congress came in and required them to do it in cents. So even if it's like Apple, you're allowed to do it to cents, right? And so you get this, there's always this spread in stocks. So it's something that doesn't really apply to futures, but it is a really big thing and a lot of research about it in stocks. I have no idea how it works. I just watched a video on high frequency trading firms. They put on and pull tens of thousands of contracts in fractions of seconds. Yeah. But I can explain how it works. It's really quite simple. Well, at the base level, it gets really quite simple, and then you expand upon it. Okay. Here's my edge. I want to trade the S&P 500 micro contracts. Okay. The S&P 500 micro contracts correlate directly to the S&P 500. So if the micro contract moves down 1 tick or 2 ticks, let's say, and the regular S&P 500 contract doesn't, the bid holds, then I want to take that fill basically the people that are hitting in those, those two prices down, I want to take those fills. And then if it comes back, I'm immediately going to offer some liquidity on the other side. So when it comes back and I make like 2 ticks, essentially, right? And how did I do that? I knew that I was willing to take that because the micro contract moved and the full size contract did not. Okay. So that's my edge. Now, there could be a situation where somebody knows something and they trade a ton of volume and they sell in the micros, and so the micro actually sees that we're about to move down before the full size contract happens. I mean, seems kind of a ridiculous thing to happen in the MES, but when we start to go into like, maybe we're trading the correlation between the 10-year treasury and the 6J, right? The 10-year treasury might move down before the 6J does because the informed trading is coming into the 10-year treasury, right? So then I'm going to need to go and look at the volume, and I need to have some way of determining when I get a certain amount of volume that is going against what I think should happen, then I need to say, oh, informed trading is happening and I need to pull my orders, right? So all of this is happening very, very, very quickly. And this is how these high frequency robots are based, right? And then everything else is just like adding little things that they know to create better and better edges, like determining how I should stack and pull and so forth, so that I get at the front of the queue, but that I don't catch the bad fill. Nasdaq trader, how are you? We're doing okay. You've only been gone for like 2 or 3 days, so I don't think you missed too much. I've been yapping a lot today. We've been having some good discussion. I hope you guys are enjoying it. Disciplined. He's asked some good questions. I like it when you ask a question like that, and I have a ton of stuff to say, like that's good, because what that means is you naturally are zoning in on the things that matter. Whereas most retail traders, they don't even bother to think about these things. It's like, how does price move? How do these market making robots actually work? Like they don't care. But you can derive a lot of edge out of it. Like with everything that I just told you about how market making works, what can you derive from that? Hey, correlations matter. There might be a situation where there's a correlation that changes a lot, and you might be able to determine that they should be correlated at the moment when the robots can't. And so maybe you might be able to pull off the market making strategy when the robots can't. Maybe. Anyone making money on the ES? Well, I mean, I'm making fake money on the ES. Yeah, you know what I think is so funny with ES is that the trades that work out the best for me in ES always have the dumbest bases. That they're gonna buy the dip today, and I just want to buy on the open. Worked out. I feel happier now that I see more people. That's good. There are some beautiful girls out there. Oh man, yes, there are. Oh my gosh. You know what? I don't know how it happened. Well, I suppose I do know how it happened, but on TikTok, I've been stuck on Thought Talk for, so like we were at the band concert last night, so we're waiting for it to start, and I'm going through TikTok, and TikTok wants to show me like 10 girls in a row, and I'm like, no. I'm tired, and I'm sitting there like, have I just been watching those too much, or is TikTok trying to force them on me? Because I watch videos about trading and markets too. It's just that like most of the people on TikTok share with me stuff that's either wrong or that I already know, right? Yeah, Thought Talk. I want off of Thought Talk, okay? Won't be surprised if he has retreated a few points. Actually, I should be. Let's do this right. Let's not be like yesterday and just try and hold it all day, right? Because I'm not so sure that today is like you just write it all day sort of a day. Okay, so we need to go to ES here. And on a 30-minute chart. And we don't need ATR and can get rid of that. Why is the baby screaming like that? That's weird. Okay. Oh, it's because they recorded him and they're playing it back. That's hilarious. Oh, now that's interesting. That is not what I expected at all. Okay, so the first standard deviation is at 44.17. Oh, okay, so I should take it off. The second one is at 44.44. So that might happen, but Lucas says, Seth, maybe what I don't understand is the concept of a technical edge. Like, if you mean TA, then I agree. I was thinking technical in terms of a hard set of rules and things you need to look at. Okay, so I would approach it this way for what you're talking about. Why do I think that particular rule, when I'm looking at all of the rules in my trades, what makes me think that those particular rules matter? Okay, so if I think that particular rule matters because I went in and I did a study that says that 70% of the time when the situation is like X, it turns out this way, that is something where it's like, you be careful with that because the market's going to try and arbitrage that away. But if my edge is because of the square root law of a meta order impact, which is caused by the impact that large meta orders have on the market and the way that they strain the liquidity, then when I see a location where the liquidity looks strained and I'm just trying to do like a scalp for like one leg, then when I see that liquidity get strained, I should probably exit, right? Why do we think that should work? Because there is a structural inefficiency in the market that we know leads to a certain result. And even though that might be arbitraged away and I can't like make money just off of that one thing, I can still incorporate it into my strategy because I know at the very worst it's going to be a break even, right? So if you have a real reason, then sure, I'm totally with it. But if it's just like some random abnormality that you found, you know. But this was kind of all in the context of a lot of people don't test these things. So in that instance, I trade those rules, but always applying context. I can't just use context without those rules. You don't think so? I suppose I'd guess I don't know what the specific rules are that you're using. But some of them might be really tiny, right? Like I'm sure that you probably do something that similar to what I do where, which price I buy or sell has very much to do with the liquidity at the time, right? Okay, Blue Pinder might be a rookie question, new here. How do you measure liquidity being strained? Okay. I don't want to tell you this, but I'm going to tell you because you asked, and you asked a good question, then I'm going to tell you, okay? So the first sign that you're getting this, I'm going to draw it here to the left of my 10-year treasury. So right here, I'm going to draw it. Oh, I should use yellow. The first sign is there is a chart pattern, okay? And it looks like this, okay? So basically, at the start, you get strong momentum, but then as it goes along, it kind of dies out until it flattens out. And it seems like there's just this one price that they just stuck at, right? So you will often see this. Do I have an example of it right now here in the ES? Kind of. We'll work with it. So you kind of get something like this, you see? It starts really strong at first, but then it kind of starts to curve like this, right? The normal chartists always say it's like, oh, is this, right? No, it's a curve. Look at it as a curve. It'll kind of average it out. You're going to see that like the impact that the buys have is going to decrease over time. So the next thing that you're going to see is look at the volume. Look at the cumulative delta. So you're going to see, so it's not very good on this chart. That's probably a bad example. But something that you will see also is you will still see orders buying, like you'll still see market orders buying, but it's not really moving, right? So that's the next kind of telltale sign that you have, that you're going to see. The next thing that you're going to see is you're going to see, and this is really easy to see in the 10-year, you're going to see prices that just like they don't want to put liquidity on. So like if they were to trade down, you know, if 131.14 half was that price, what I would see is as soon as they ticked it down, this 33.30 would have pulled to like 500 contracts and they would have traded down, and then the 14 would have pulled, but they wouldn't go for the 14, and the 14 half doesn't want to offer anything and they tick back up, and then the 14 half doesn't want to bid anything and they tick back down, and it'll go back and forth like that, right? And it will do it at like all three of these prices where it's just like, it seems like that the market maker just doesn't want to take fills anymore, right? And anytime that any kind of like volume comes in, like all of the orders pull. So that's kind of what you'll see. And over time, what will eventually happen is it'll turn into this price right here. It's like, it's very interesting. If you go back and look at it, 17, you know, you might have been able to predict that 17 was going to be the point of control when it traded, because you could see that they were like, it was balanced there. It was like, they don't want to offer the liquidity there because they know that like that's a fair price. So it kind of ends up, it's kind of funny because it's like, it's unintentional. It's not like they all agree there or anything like that, but it's because the liquidity gets constrained, like they can't move out of it, right? So if you really want to look at the study that where they found this, it's like Walrusian auctions and something blah blah blah. So it had something to do with Walrusian auctions, right? And they kind of explain how when they don't want to put any liquidity up there, then kind of what happens is like everybody that wanted to trade there is already traded, right? So that's another telltale sign, is a big order happens at that time, right? So come back here and look at this. Here is my tape for the whole day, right? The first time that we touched 17, what happened? There was a 37.50 market order that came through it, right? So what does that work out to? Especially when that's like what the inside bid and offer is right now, right? So what happened was somebody came in and sold everything that was offered at 17, and then anybody that wanted to buy at 17 is like, oh, already got filled, they're screwed. Maybe not, right? But like everybody that wanted to trade there did it. So if you come down to now 16 half, there's going to be more buyers, and you come up to 17 half, there's going to be more sellers. This is just like naturally, mathematically, that's what's most likely to happen. And they're basically going to have to balance out there for a long time until you get enough market orders for them to finally, move down again, for this situation to change. And that can often be 45 minutes to 90 minutes. So that's what I'm looking at. I'm spilling all of the beans. Well, I don't like to share it just because I feel like that's like one of the real key things that I've got. But at the same time, this is caused by a structural inefficiency in the market. So me explaining that to you is not going to stop it from happening. Right? Like, that's the thing that's so funny about it, is that it happens despite their best efforts. In fact, I specifically remember when I was one of the few times that I was talking to the traders and they were explaining the situation that they were in right now. And I was like, so why don't you just sell everything that's being bid there right now? And she said, well, because if I did that, that could cause a problem and might get us stuck there. And I don't want that to happen. Right. This is also, by the way, why these big block orders, you might want to pay attention to them, right? Because somebody that's really big, he doesn't necessarily want to throw a big order through like that, right? He might be stopping out or, have no choice. So you can make, if you look at a big order as like he didn't really want to do that, can tell you some interesting things. Okay, so let's see here. What was Lucas saying? One example where you can't trade context without rules. Don't trade at market. Take advantage of the spread and limit orders. Strong technical edge there can be mathematically proven. Yes, that's exactly. So then you use context and that's where it gets tricky, but you still need to use that rule. You can't ignore it if you're scalping. Right. No, that's totally true. Yeah, I think you understand. Yeah, I think we were kind of off on different things, because when I was talking about all that other stuff, I was really talking about traditional technical analysis. I go through and I do a study on the market and I find a technical aberration and I try and take advantage of it. They exist. I think that you're more likely to find them through order flow, but there's problems with them. And what I have learned, everything that I've learned about the markets basically says it's not like a technical edge can't exist and doesn't exist. Au contraire, they very, very much exist. It's just they're not really worth pursuing. It's really good to do back testing so that you can kind of test things and understand how the market works. But you've notice how I'm just like way less interested in back testing something and then trying to trade it and all of this sort of a thing, right? Is because all of the back testing helps me understand the market. I'm not trying to find a technical edge to exploit necessarily, unless I have a really good reason to think that it's going to be there, right? Because you've traded like 100 I've traded thousands of different strategies, back tested them, and I've maybe found like 2 that kind of work, right? That's exactly what will happen to you if you go down that road. I'm just telling you, they're so much harder to find. It's not worth it. It's not worth it. Take advantage of the take advantage of the informational inefficiencies. Stuff that the robots can't do. This one, and if you're just coming in here and you don't know what I mean by that, a good example is what we had here happen this morning. We had a pretty good jobless claims report, and also yesterday the whole debt ceiling thing kind of came off, although there was some concern that the Democrats would reject it. But then we got a story that said basically that they were all positive after the big meeting that Democrats had in the morning. So they came out. So that means that those are all things that are bearish for treasuries. And the treasuries were slow about it at first, but we knew. There was almost no doubt in my mind when I took that trade. I did it. If I come in and I already have a position on the screen, then I feel really confident about it, right? No doubt in my mind that the treasury was going to move down today. Informational inefficiency. Boom, 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 boom. So tell me, because the thing that I have a problem with is like, so I'll go on TikTok, for instance, and I can be like, okay, technical analysis is BS. Nobody cares. It's like they're not, that doesn't really attract people's attention, right? But if I come in and I say, okay, here's an informational inefficiency that you can use, then the comment that I always get is, oh, don't worry about it. Just trade what you see on the chart, right? It's like, I don't know how to convince people that the informational inefficiency is more fertile ground without destroying technical analysis first. You know what I mean? NASDAQ traders laughing about it. I don't know. I need better ideas about how to go about that. Because think about it. How many people are there out there going through here and looking at a chart like what I do the beginning of every day, right? What do I do? How do I come in? If I came in yesterday or this morning, what did I say? Came over to the charts and I said, okay, so yesterday we had a really big move up after McConnell offered the Democrats an extension of the debt limit that would take us to December. And that was this move right here. Okay. And this move was based on X and Y or whatever. And I'm always trying to look at what might be the driver of that flow and that flow. Because if this flow down was technical reasons, for instance, maybe this move down is because interest rates are rising because the economy is good, right? So if interest rates are rising because the economy is good, yeah, that's going to hurt stocks. But in the long run, that's still good. So I want to buy the dip there, right? I want to buy the dip. And so I'm kind of looking at flows and the reasons for them, and I'm trying to discount certain flows compared to the others. Right? Nobody else does that. And can you imagine how much better of a spot and how much more understanding of markets and how much better our analysis could be if other people besides myself were doing that? You know what I mean? TA traders are slower and not specialized at all. They trade all markets as if they were the same. I, for instance, am way faster than TA traders and much more specialized. You take advantage of them. Yeah. You know what? I think that's one of the best reasons to trade ZN first. Huh? What do you think? Because if you trade ZN first, then you immediately know that all of the stuff that people typically talk about is not really the way that they are, right? Because nobody has traded the ZN and then gone and said, oh yeah, all of the chart patterns that you look at on the S&P 500, they all totally work on the ZN. Like if anybody ever said that, they probably were inexperienced, because once you've been trading the treasury for a while, you realize it moves very differently because of the liquidity. Well, my understanding was that Lucas was doing more of a market making recently, right? Were you doing MES? I don't remember anymore. But we were talking about it because when I was messing around with that. Lewis says I trade ES the best. I don't know, man. Oh, he's doing NQ. Yeah. So the problem that I have is I think that the market making style of things is a great way of going about it. But in order to pull that off, you kind of need a relatively thin instrument. So I don't think that there's really a market where I think I could find that edge that I'm really comfortable with right now. I think probably the best place to do it is NQ. I mean, I've shown here on the stream a couple of times where we just tried to do it on NQ and we were able to make a little bit of money, So, but NQ is a monster, that thing terrifies me. So, by faster, I mean the DOM is a faster tool and much more. Oh, for sure. I got to tell you, the thing that I find the most funny, there's a troll on another YouTube channel that spends a lot of time attacking me for whatever reason. I think it was because I was basically like the largest YouTube influencer in the space. Since then, there's been this whole rise in influencers in the financial space, and now I'm small cookies, and so he's trying to grab the attention because it's all marketing really for him. But he always comes in and he says, "Oh, Jigsaw, it's a total scam." And I just think that it's the funniest thing because it's like it's literally an execution tool that allows me to input my orders in a more efficient manner than what people do on charts. How is that a scam? It's like the most demonstrably false thing. It's like anybody that takes, downloads the application and tries it, or just watches one of my streams and sees what the DOM does, right, should know that he's full of shit. Because it's unquestionable that it's a better way of submitting orders. It might not be enough for you to really want to try doing it. I understand if people want to use the chart trader, but it is better. To trade NQ, you need a large stop and not more than 4 contracts. Yep. Totally agree. I think you're probably right. I haven't done those kinds of studies on NQ, but not more than 4 full contracts, probably. You hate what you don't understand. Well, I don't even know if it's that you don't understand it. I think that it's all just bluster to try and attract attention. Right. When you're basing your livelihood off of selling an indicator, like, listen, there's nothing wrong with selling indicators, right? But what he sells is like $1,000 for a license, right? So that's a pretty big sell. So how do you go about finding people that are willing to spend $1,000 on your technical thing, right? Would I be able to go and take my indicator package that I've put out there and convince people to buy it for $1,000? I don't think so, because I've been explicitly trying to attract people to this stream that don't think like that, right? But if you're trying to make money off of it, then that's exactly what you got to do, right? And so anything that you can do to try and like discredit everybody else and just generate drama and attention, that's going to attract more people that are likely to spend $1,000 a pop. And if you can just get even 3 or 4 people a month to do it, then you can live off of that. So I think that's the way he does it. Yeah. I think you should keep doing your job on YouTube because you are helping people not lose hard-earned money and the time unnecessarily. Keep doing that. Don't listen to them. You know what, NASDAQ trader? Oh, well, I appreciate it because I love doing the YouTube, and there's never been at any point that I've been like, oh, I don't want to do YouTube anymore. There's been points at which I'm like, oh man, I'm not doing very good at this. Maybe I should stop or change something. But then it's always like, but I love doing YouTube so much. It's great. And I love the stream and all the people here, And, but it's been hard to generate regular content lately because of the baby. So and sometimes when I do have the time, I am not motivated to do it, especially since like writing scripts and stuff is becoming difficult, because the funny thing is that I thought that over time I would make the channel more general, but kind of what happened is I went a little bit more general, and now all of a sudden I'm specializing down in again for a little bit. And so the videos that I've been making lately are way more complicated and hard to write. How big of an account should you start with? Well, that depends very much on the instrument, but the thing is that almost everybody when they start out are probably trading an account that's smaller than what they should be trading with. And I could give you a number, but I almost guarantee that if you start trading futures that you're going to make some compromise somewhere on that anyways. So it's almost like not worth putting a number out there. But I will tell you, man, like what you want is you want to be able to lose for a really long time. Okay, because I guarantee you when you start trading, you're probably going to lose a lot, right? But if you come out on the micro 10-year futures and you're trading one lot like what I'm doing right now, right? And you lose big, like think about this. This was a big move today. Well, it wasn't a huge move, but it was a pretty decent move that I caught here, right? Imagine if I had been short and I had eaten all of that. I would have lost $30 on a big move, right? So if you have like $1,000 account, how many times can you lose $30 before the account is gone, right? Like that's going to take you a really long time. That's going to take you like a year to blow that account, right? So there you go. If you want to trade the 10-year treasury futures, $1,000 probably would be, you would probably be just fine. If you're going to do the ES, like could you trade the ES with $1,500? Like, yeah, but you might blow that within a month. If you're really bad, you might blow that in a month. If you're more careful and you at least avoid the huge blowups, but you don't do well, still that might be 3 to 6 months, right? So if you're going to trade the ES, you're probably better off having more like 5 to 10,000. But maybe you don't have that much. I mean, I think one of the things that attracts people to futures is because they don't have enough money to day trade stocks and get around the pattern day trader rule, right? So I don't know. I really like these 10-year instrument. I've really enjoyed it. Like I know everybody will look at this and scoff and be like, yeah, you made $30. Big whoop, Seth. I'm trading thousands of dollars a day. Like, who cares? I'm enjoying it. I'm getting better at it. It allows me to do things that I wasn't able to do before. And I'm really happy with it so far. And it kind of forces me even more to take advantage of informational inefficiencies because of all of the issues with getting filled and stuff. Which, hey, more fertile ground anyways. 1 year maybe quicker. What? Oh, and you know what? Today was a fast stream. You know what happened was I went to bed so early yesterday. Because the day before, I remember I was messing with this stupid light board thing. And I blew it, right? So this time I said, hey, we're going to go to bed early. So I was literally in bed, 9:30, eyes closed. Actually woke up a little bit earlier. You say ZB has found a floor? Might be. Given the time frame, there might be another little extension a little bit further. Maybe. It's very often the case that like in the treasuries it goes like this. Like that, right? So you are here. Right. So we might get that. Here's where though I think that like I don't know. So let's game this out because I think that the jobs report tomorrow is going to be really good. So I think maybe they come back overnight. I have no reason to think that they'll come back overnight, but maybe they come back a little bit. But since I'm short here, so should I take my profit here and try and get short again? I don't think that makes sense. I think that it's better for me in this situation to try and swing it because I think that it's going to go bleh. It's going to puke way down on Friday. And then as soon as I get that puke on Friday, I want it. I don't know if I want to ride that one all day. So I've made that mistake where I got that. That's what happened to me last time, right? Was I got it and it went the right way. And then I'm like, okay, this is great. I can just let this ride all month. And then it went whoop, and I lost everything. So that was bad, right? You sound like you were energetic, which is great. Yeah, but I think it's also that you guys we've had a good conversation today. Past couple of streams, well, past few weeks has been a little bit sparser. We're only 25 viewers today, so that's okay. But it's been a little bit more sparse on the stream, and we didn't have as many interesting things to talk about. So I think I'm more animated mostly because of the conversation. Oh, what was Ace Trades saying? Are you responding to there? Oh, I have this thing set to top chat. I watch ZB not move and wonder why anyone trades it. Well, let's think about this for a second, Ace. At 6:20. Oh, it doesn't tell me. I think it was at 10. Okay, let's say 12. I think it actually opened at 12. I think it actually opened at 12, but let's say 10. Okay, so let's say that you came in, you knew that it was going to be a down day, and you sold ZB at 10. Okay, so we have gotten 10 plus 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So that's 5. Okay, so that's 506. That's like 696. So that's like $696 for $500 worth of margin. Right? Because the day trade margin on a ZB is $500. Okay. One contract. Oh, and by the way, the commissions are cheaper than they are in ES because they're treasuries and they're trying to encourage you to trade them. Yeah. That's why people trade them. Do you ever watch Trades by Matt? It's hard to watch that guy take infinitely large losses and tiny winners. Don't know how he is still trading. Oh, that's interesting. You say that, Disciplined. I'm on now. I'm like slightly suspicious that you're trying to like goad me into saying something. I have so. It looks to me like Matt is I've never really sat down and watched his stream or anything like that, but from what everybody tells me, it sounds like he is just a genuine guy that's trading and streams it much like myself. And I've never made any kind of crazy performance claims, and I don't think that he's ever made any kind of crazy performance claims, right? We would just say, we trade, sometimes you win, sometimes you lose. I do think, based on what I understand about how he trades, that he's really vulnerable to fat tails. He's really vulnerable, which is like, it will go against him and he'll be fading it the whole way. You're not the first person to say that. Yeah, I won't say, you don't have to say anything if you want to. No, it's not that. It's just like, sometimes I think there are some trolls, like I was saying earlier, there's somebody that like is always trolling this man. Holy crap. And one of the things that they try and do is they try and get other influencers to like, turn on each other. I don't have any reason to, I would love to talk to the guy, but it's not like, okay, I'm going to go and message Trades by Matt because I want to talk to him. But then like, what would I say? You know what I mean? When anything that I would tell him, he would probably already know, like, yeah, sometimes I do let it go against, I fade the move and I shouldn't be doing that. But what are you going to do, right? But that was kind of a thing a little bit earlier in the stream before you got in here. You can be a noise trader and make money. And one of the ways that you can do that is you can have a really large stop, right? And I think that's kind of what Matt does, is he has a stop that's much larger than what his target is going for, right? And then you get a high win rate. And the problem is just that there's going to be like a losing streak when that doesn't work very well. And that's where he's had like, his blowups. And he was always really good at getting to that point and then stopping, right? But then, you tie that line so closely that you make a mistake and then you lose the account. And so that happened to him once, right? I wouldn't like trash him too hard for it, because we all do that sort of a thing, right? Doesn't mean that he's a bad guy or that you shouldn't listen to anything he says or anything like that. I would only say that I personally would recommend that you keep your R factor, which is the size of your average winner to your average loser, above 1. That's my recommendation. This is the most politically correct statement I have ever heard in trading criticism. Well, the other thing is that he apologized to one of the people that's been out there causing drama. Decided to cause drama with Matt, and so Matt apologized to him, and that was the wrong move. he apologized to him, and he gave him a video that they played in the other guy's Discord, and I was like, you gotta be kidding me, dude. Is this for freaking real? You're rolling over for this guy? Have some backbone, man. That was the thing that we were talking about the other day, where I was like, I'm not gonna tell you what it was, but it's far enough in the past now that I think I can kind of explain what it was. I really did not like that he did that. It was like, I understand it, but him doing that just makes me think like, dude, what a pussy. Oh my gosh. I hope if he watches this, he can hear me say that and laugh about it. But oh my gosh, what a pussy, man. Can't believe you'd roll over for that, but whatever. Let's see here. What's Ace saying? Maybe I should keep an eye on it. Maybe not so much getting stopped out. And I like the lower commission looking at it now. Yeah. So here's the thing with the ZBAs. When you catch a trade like this, like look at the trend, man. Look at the screen. I'm going to give you 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so look at this. This is the open right here. Okay, so if you went short at the open, the most that it ever came back was like 1, 2, 3, 4, 5, 6 ticks, right? Comes back 6 ticks. That's the most that ever comes back on you. Like, holy crap. So when you catch a trend in the treasury, it's the best thing in the world. Okay. E-mini, you catch a trend, it's always super choppy, right? And it'll come back like 50%. And then you're like, no, it's fine. I'm just going to stay in and it's going to keep going and yada, yada, yada. Right. But it's so frustrating in ES trying to let them run. Now the ES can run so much, but it can be frustrating. In the treasury, when it's a trend, it just goes and you don't have to do anything. You just sit and watch it. I mean, look at this. I took this trade before the stream. I haven't had to do anything because I know what's going to happen. Essentially, right? And I'm hoping that I can swing this. Right? So for trends, it's great. When it's not trending, oh my gosh. When I was trying to trade ZB, like the reason I stopped trading ZB is I would come in here and it'd be like, okay, I think I only want 4 ticks. And, I think that this is the edge. And then they would go and stop me out at 4 ticks. And then they would come right back and go to exactly where I thought that they were going to go. Like there is some, if it's not trending, the mean reversion behavior in the treasury is really nasty. So if you are trying to trade, like your little, the same thing that you do in ES, you're probably going to have to modify it significantly for it to work in CB. I might have to convert to be a treasury guy or at least add it to my toolbox. I think you should at least add it to your toolbox. I was going to say, like I said at the beginning, I say you start with the treasury. Yeah, you learn so much with the treasury. And then it's just there in your back pocket because there's going to be that day where the S&P 500 is falling apart. And you would really like to just go short the S&P 500, but it's so volatile that you can't catch a spot. But then you can come over here and you can buy the 30-year treasury, and it's, you know, it never goes a tick against you, and it's just the easiest trade in the world. So it's really good to have it in your back pocket. NT has increased the day trade margin to 1,000. Oh, okay. Well, that's good that they did that then, actually, because I always thought 500 was too little. But you can trade it in the 10-year, it's still 500. Well, anyways, it is time. It is time for me to get going. Before I go, we said in ZB, remember, okay, so 17. The absolute low from yesterday was 158.06. So I can't say if they're going to move lower or not, but certainly that last little move there was more aggressive than we kind of expected, wasn't it? So I don't know, but yeah, we'll see what happens. I don't know if I'll manage it or if I'm going to try and let it swing till tomorrow. But I got to go. I will see you guys tomorrow. In the meantime, stay profitable, friends.